Hey everyone, welcome back to the channel. Today, we're re-diving deep into a topic that is absolutely crucial for anyone in the financial markets: the common mistakes that traders make, and more importantly, how you can avoid them. Trust me, even seasoned traders can fall into these traps, so whether you're just starting out or you've been trading for a while, this video is for you. Making mistakes is part of the learning process, but knowing what they are ahead of time can save you a lot of money and a lot of heartache. Let's start with the biggest one. Mistake number 1, trading without a plan. This is like trying to build a house without a blueprint. You wouldn't do it, right? So why would you risk your hard-earned money without a solid strategy? A trading plan isn't just about when to buy or sell. It should define everything: what markets you'll trade, your risk tolerance per trade, your profit goals, and the specific setups you're looking for. It's your personal rulebook. When emotions run high, and they will, your trading plan is the objective guide that keeps you grounded. Without it, you're just gambling. This brings us to mistake number 2, letting emotions drive your decisions. The two biggest culprits here are fear and greed. Fear can make you exit a winning trade too early, missing out on potential profits. Or worse, it can cause analysis paralysis, where you're too scared to pull the trigger on a good setup. On the other hand, greed is just as dangerous. It is that little voice telling you to hold onto a winning trade for just a little longer, which often leads to watching it turn into a loser. Greed also tempts you to overleverage or take trades that don't fit your plan, hoping for that one big win. The best traders are disciplined and almost robotic in their execution. They follow their plan, not their feelings. The third major mistake is poor risk management. I cannot stress this enough. You can have the best strategy in the world, but if you don't manage your risk, you will blow up your account. It's a mathematical certainty. So, what does poor risk management look like? It could be risking too much of your capital on a single trade. A common rule of thumb is to never risk more than 1 to 2% of your account on any given trade. It also means not using stop losses. A stop loss is your non-negotiable exit point if a trade goes against you. It's your safety net. Trading without one is like walking a tightrope with no net below. You might make it a few times, but one slip, and it's over. Mistake number 4 is something I see all the time, especially with new traders: revenge trading. You just took a loss, and you're angry. You feel like the market took your money, and you want it back, now. So you jump right back in, maybe with a bigger position size, on a setup that's not really there. You're forcing it. This almost always leads to another loss, which makes you even angrier, and it creates a vicious cycle that can wipe out your account in a single day. When you take a loss, the best thing you can do is step away. Take a walk, review the trade to see what went wrong, and wait for your emotions to settle before you even think about placing another trade. The market isn't going anywhere. Hey, we are covering some really important ground here. If you're finding this helpful and want to get more practical trading tips and guides to help you become a more profitable trader, do me a quick favor and hit that subscribe button and turn on notifications. It really helps the channel and ensures you won't miss out on future content. Okay, let's get back to it. The 5th mistake is failing to adapt to changing market conditions. The market is a living, breathing entity. It's constantly evolving. A strategy that worked wonders in a strong trending market might get completely chopped up in a sideways, ranging market. Successful traders are flexible. They understand that different market environments require different approaches. They're always learning, always observing, and they're not afraid to adjust their strategy or even sit on the sidelines when their current plan isn't aligned with what the market is doing. Being stubborn and sticking to a single method no matter what is a recipe for disaster. Mistake number 6 is overtrading. This is the constant need to be in a trade, clicking buttons all day long. It often stems from boredom, impatience, or the false belief that more trades equal more profits. In reality, the opposite is usually true. Quality over quantity is the name of the game in trading. Professional traders can wait for hours, sometimes even days, for that perfect A+ setup that aligns with their plan. They understand that their job is to wait for high-probability opportunities, not to force trades just for the sake of being active. Sometimes, the most profitable position you can take is no position at all. Being flat is a position, and it protects your capital. Now for mistake number 7, not keeping a trading journal. How can you expect to improve if you don't track your performance? A trading journal is more than just a record of your wins and losses. You should be logging everything: the date, the asset, your entry and exit points, the reason you took the trade, your emotional state at the time, and what the outcome was. By regularly reviewing your journal, you can identify patterns in your behavior. You'll see what's working and what's not. Maybe you'll discover that you're most profitable in the morning, or that you tend to lose money when you trade a specific pattern. This data is pure gold. It's your personal feedback loop for continuous improvement. Mistake number 8 is listening to too much noise. With social media, news channels, and trading forums, we are constantly bombarded with opinions. Buy this stock. Sell that crypto. It's easy to get caught up in the hype or the panic, leading you to second-guess your own analysis and abandon your trading plan. This is called analysis paralysis from information overload. You need to learn to filter out the noise. Have a handful of trusted sources for information, but ultimately, your decision should be based on your own strategy and your own chart work. Don't let someone else's opinion on Twitter make you take a trade that you would have taken otherwise. Number 9 is a big one: having unrealistic expectations. Many people come into trading thinking it's a get-rich-quick scheme. They see flashy ads or social media posts and believe they can turn a few $100s into $1 million in a year. The reality is that trading is a serious business. It's a skill that takes time, dedication, and a lot of screen time to develop. Consistent profitability is measured in small, steady gains compounded over time, not in lottery ticket wins. If you expect to double your account every month, you'll take excessive risks and inevitably fail. Set realistic, achievable goals and focus on the process, not just the profits. Finally, mistake number 10, not investing in your education. The market is an arena where you're competing against some of the smartest minds and institutions in the world. If you're not continuously learning, you're falling behind. This doesn't mean you have to buy every expensive course out there. There are tons of great books, reputable websites, and quality YouTube channels. But you have to put in the work. Learn about technical analysis, fundamental analysis, market psychology, and risk management. Test strategies on a demo account before risking real money. The more you learn, the more confident and competent you'll become. Your education is the best investment you'll ever make in your trading career. So to recap, we've talked about trading without a plan, letting emotions rule, poor risk management, revenge trading, failing to adapt, overtrading, not keeping a journal, listening to too much noise, having unrealistic expectations, and not investing in your education. By being aware of these 10 common pitfalls, you're already miles ahead of the majority of novice traders. Focus on discipline, process, and continuous learning, and you'll put yourself on the path to long-term success in the markets. Thank you so much for watching. I hope you found this breakdown really valuable. If you did, please give this video a thumbs up and don't forget to subscribe and hit that follow button for more trading tips and in-depth guides just like this one. Drop a comment below and let me know which of these mistakes you've struggled with the most. Let's learn from each other. Until next time, trade safe and trade smart.